the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And we hope lots of great ideas, opportunities for you throughout the show. This was a week when we saw the stock markets around the world turning down. It's been basically a choppy week, and a lot of news that's come out of China has really been affecting the equity markets. U.S. market very choppy, but lower on the week. S&P 500 down just fractionally right now, but the Russell is actually weaker. So when we look at the third tier of the market and we see that starting to weaken, that gives us some sense that there is some selling out there in the market. The news that was behind all this basically was from China, as they came out with some really bad export numbers, plunging 10%. I mean, that is some really slow numbers. That broke the markets on Thursday, but then Thursday saw a big recovery. Show you that on the chart in just a moment. And on Friday, their inflation number came out in China, which was stronger than expected. That's like a bad news, good news thing, but I think it's bad news. If you remember the 70s here in the United States, when you had slow growth and you had rising inflation, we called that stagflation. Anybody know the word in China for stagflation? That's really potentially what they're getting into right now. The UK also getting sold pretty hard, fear of a hard Brexit, as their currency under a lot of pressure. The euro currency also following it on the downside. Emerging markets, EEM, if you look at that, you'll see a breakdown out of a diamond consolidation pattern as the dollar gets strong, and the fear is they're going to get a squeeze as the Fed raises rates and economy's slow with China going through what it is. So emerging markets also have been under pressure. U.S. stocks really wide swings and underwater by a small amount, we'll call it, on the week. The bond market tried to rally, really could not get much going. In fact, it failed as we had expected to do. And the news coming out based on the bonds action around the world is that the Eurozone, they're talking about tapering their massive amount of QE that they've been doing. The Fed, of course, talking about a rate increase this December, and the conversation that Yellen has had today, I would say a bit on the dovish side. I don't think it's going to stop a rate increase happening in December after the election, of course. And the bond market, we actually think a bounce is coming, and I'll show you that at the end of the show. Dollar, huge strength in there as everybody's thinking about the Fed rate increase and how that would attract money here into this country because rates going up. Well, rates are really going up around the world, and the truth is that the bond market, in other words, when bond market fall, the rates go up, and that makes the dollar go up. That's a myth, and I disproved that in a video that I did Thursday of this week, where you could look at my bond market big picture analysis, where I compare the bond market to the gold market, the dollar, and the stock market. And when you look at that on a long-term basis, you will see that the dollar going up when interest rates go up is a myth. And you want to see that. If you're not a member, please become one. Gold market this week, was in a narrow chop. It really remains under pressure, and we see a bounce also coming for that in the coming weeks. So you're going to want to watch our short-term view. I know everybody watches that, so you'll see that when we get to that part of the show at the end. Oil, well, it stalls after a big upside week, just small gains. This whole issue about Russia and the Saudis getting together, Putin, it appears based on if it's right about the WikiLeaks and everything, the hacks coming out of Russia, he really does not like Clinton, and so the sense is that the two countries there are really going to do what they can to keep oil up, to get oil up, and we think it's going to have some more gains out there pretty soon. The other problem is that Saudi Arabia is pissed off because we have passed a bill that allows U.S. citizens to sue them for 911. So all of that smells like higher oil prices coming in here if they have anything to say about it. Of course, the election, it's just over 3 weeks away. Can't possibly get through this segment without making some comments about it. I'm concerned about going forward, concerned about the economy, concerned about you and my kids and grandkids, and about opportunities that will be out there for all of us, all of them going forward. This is the dirtiest election ever. I mean, when I try to read things about worse elections, I can't find anything that I can see. Certainly the worst in my life, and for me, the worst choices. How did we possibly get here? I'm a libertarian, and I don't even love my libertarian choice, though I course, do back libertarian policies mostly. The market knows that Hillary Clinton has a 7-point lead right now, that it is, based on the bookmakers, an 85% probability that we're going to have President Hillary Rodham Clinton. And the market's having a really tough time celebrating that. Why exactly would that be celebrated anyway, when you think about it, is that, it's basically status quo. Things will be the same. It's Obama 3, however you want to put it. And things are going to go from where they are to worse, actually. And the Federal Reserve, who is responsible for these massive swings in all of these decades, is going to stay in control. That certainly isn't going to change. And we will have an untrustable socialist essentially in office, with a good chance of seeing economy crippled as we move forward. Or the alternative is a narcissistic, alleged sexual predator who is a nationalist that will kill trade, that will do things that also can cripple economies. And if there's anything that he might do, is disarm the Fed. And if there's any reason why I lean that way, it would be that both are sure to increase the debt by very significant amounts. And you got to say to yourself, where are we headed? And can this stock market put on any kind of a rally in here based on these prospects moving forward? I honestly don't think so. I think that we have reached the limit of what the Fed can do, and they're going to look at potential fiscal spending as the next alternative, and that means taking on a lot more debt, and the bond market's going to see that, and the bond market's going to continue moving to the downside, and stocks are not going to like that. So it's a lose-lose everywhere you go. Lose, 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 and it's a bad picture for the stock market coming forward. Janet Yellen today comes out and she says, maybe we can let this economy run hot for a while just to be safe. Could you tell me where you're looking that the economy can run hot? We have 1.4% growth in this economy. No real visible inflation yet, though we might be getting something on record low unemployment requests at each week. We're getting these numbers, and we're at a 42-year low as far as people that are going for unemployment compensation each week. So that's potential wage inflation coming. But overall, there's nothing running out here, and I don't even have a clue what Janet Yellen is looking at. So, I mean, Hillary Clinton, Donald Trump, Janet Yellen, those are the leaders. We're screwed. I mean, that's basically where I believe we are. Let's take a look on that happy note. What happened this week as we look at our 60-minute chart of the S&P 500, and you can see that right in here as we go and take a look at what happened on Monday. So Monday, what we saw was stocks move to the upside. Really, Russia joined Saudi Arabia and pushes oil up 2.6%. You can see that right over here, and we get this overnight big move that when oil moved up, the stocks moved up with it. And this is just Putin responding to the U.S. cutting relations based on what's going on in Syria. And Apple moves up, which helps the market also, as Samsung ends the Galaxy Note 7. They give up on that one because they don't want any more to explode or start fire. On Tuesday, Alcoa, their earnings come out. They missed. That weighs on the markets. Goldman Sachs comes out and said third quarter earnings are going to be disappointing, and the market gets that big move on the downside. On Wednesday, stocks move up into the Fed minutes and then down. You could see that right in here, and then sell off late in the day as the market was relatively slow on the Jewish holiday, Yom Kippur. Thursday, we saw China weak exports really break the markets overnight. We had a big sell-off. S&Ps get down 22 points early in the day, and then the buying comes in and move up. Here's that jobless claims number that came out and that I stammered on a moment ago because I couldn't believe it, that was at a 42-year low. That's a potential wage inflation coming in there, but market couldn't stay down as it was down 22 points, gets all the way back to even, and it sells off a little bit on the close. Friday comes, China inflation stronger. You could see it right there. So China exports weak, the market gets killed. China numbers stronger, and here on inflation, the market goes up. We get a big rally here in the morning, but bonds are really weak. Also, retail sales and PPI stronger, and of course those are volatile numbers in the retail sales. And then the market can't hold the rally and sells off and has chopped around here as we get coming up to the last hour of the day. So that's a look at the 60-minute chart, and take a look at our earnings and economic calendar for the coming week. And what we have here is the beginning of earnings season. So the banks have started to come out with their earnings, and they were pretty good as far as earnings come, but a lot of it's coming on trading bonds. So they couldn't really hold the gains. Bank of America comes out Monday morning. IBM, Netflix, and United after the close on Monday. And then you could see as they really do start to pick up on earnings as some big ones come out in the next few weeks. So IBM, the early one in the week, that's the big one. And American Express, eBay coming out here Wednesday after the close. Then we have Schlumberger, Microsoft after the close on Thursday. So lots of earnings starting to come out, and that will be, of course, some big movers for the market. The only potential market mover that I see in here in the United States, because China is the one that's doing it, is the consumer price index over here on Tuesday. That could certainly move the bond market nicely because we're starting to pay attention to inflation numbers in here, and whether or not the Fed is going to be that aggressive or not. So we start to get some hot numbers, and we're going to start to see more hawkish talk out of the Fed, and that will disturb markets. That is our opening segment for the week, and I'll be right back with the best and the worst. For the best of the week, and since, well, earnings season really hasn't started yet, though it will in the coming week, not much really happened. There's only two groups that had much in the way of upside. That will change starting in the next week because all these earnings reports will see some big moves, I'm sure. The two groups really are airlines and solar. A couple stocks in the solar group got some pretty good moves. What happened this week that stimulated the airline stocks was a good earnings report out of Delta and a conference call that seemed to get people excited. So we got some upticks in there. But actually, we don't think that those are going to last. Let me show you the stocks in that group. We'll start out with Delta that has just a couple of percent uptick this week. There were some other stocks that were up quite a bit stronger. You'll note that we have our colored phasing in here. The green phases are the up phases, the yellow phases are corrective, and if we get a cycle breakdown and it gives us a negative phase, you can see that right there in the red phases. You can actually see the breakdown right here also in that big red phase. So where are we right now? Well, this is basically a positive cycle pattern that we're in, as we see this whole period in here being really a rally made up of two pieces. You see these two little cycles here? That's this right in here and this one right in here. So we're in this area of a potential correction where the two cycles, you see those cycle brackets pushing down? They say that a correction is coming. You can look at each of these past periods where you had that right in here and right in here and right in here, and you could see each of those brought corrections to the downside in the stock right there. So that's cycle theory, and it says to us, well, this rally in here in Delta, and you're going to see some of these other ones looking the same, don't really look like it has a lot of upside potential right now. We're going to look for modest corrections just as our forecast shows in here, and then another move come after election time to the upside. You can see that starting sometime in November. I'll show you some of these other ones. LUV, Southwest Air. This does not have our colored phasing in there, but you can still follow the cycle patterns. Note gets right up to the intermediate 78.6% in this rally phase. Here's the corrective period we're looking for, and then the next rally after that. That looks something like this. You could see that right there. And take a look at that. Now, by the way, Southwest up 8%. American Airlines up about 3% on the week. And you can see this one, similar pattern, gets up to that 78.6% Fibonacci resistance level. We're looking for a pullback in here, and then another rally after that. So see that November-December period actually looks like a better time for the airlines. Delta, which led that, up 2%. Alaska Airlines up 6%. JetBlue up about 5%. And United Airlines up about 1% only. So that's the underperformer. Here's United Airlines here, and you can see we're looking for the same type of correction in there. What's all that stuff popping up? And let's just take a little closer look in here. Note the tweezer top, the selling that's coming in up at that level. There's a major 50% right there. And so what we're looking for is the same thing. You can see our cycle comparisons in here as we look at United and Delta and American, all looking like a correction into what we call a synchronized period of lows right here. So that calls for a decline into early November and then another rally up in here. So United is the one that I'm short, and I think that that pullback is going to pay a little bit of money. So, we had a little respite in the oil market this last week, and we kind of think that oil is going to have another pop on the upside coming soon. So that is is probably part of what can weigh on this airline group, since that's the biggest input cost, is their cost of energy. So that's a look at the airlines. Two more stocks we'll look at only. First Solar, FSLR, that up 5% on the week. This FSLR, let me get the right symbol up in here, and this one in here looking to us like it's got potentially some more time on the downside. Here's that chart showing you right in here, so we're not overly excited about this one. Here's another thing, they're estimated to earn 4.25 this year, and then they keep lowering these earnings, now looking like 215 for the year. The PE is around 18 forward. It doesn't leave a lot of upside in here, and this pattern is suggestive of some more movement on the downside. Same thing for CSIQ, which has been our favorite. Still, we've been wrong on this one. We had some fantastic calls in the beginning of the year. This was on my list for the best 12 stocks for 2016, and so far, what's it done for the year? Well, it's lost more than half its value. So this was one of my worst calls of the year, and I'm probably going to be putting this on my list for the best of 2017 because Hillary Clinton, probably going to be President Hillary Clinton. She's very favorable towards groups that are alternative energy types. So, this looks like it's declined into November to complete this, like we saw in First Solar. But then after that, we get into a better period. We expect to see this downtrend over with and a base being built and a much better time of it. Right now, we're still looking for a move back under $12 in this stock. Maybe that can happen with Hillary being elected, but we're going to be a little patient in here and look for good buying opportunity and that being a good stock for next year. That's it for the best of the week. I'll be right back with the worst. For the worst of the week, this is going to be a longer segment. There was surprisingly a lot of stocks that took some pretty good hits on the downside. And, of course, earnings coming. We're going to see more of that coming. So the worst stocks of this week, clearly in the 320 I follow, were in the 3D printers. There's not much to do in these stocks. I follow Triple D and Stratasys, and analysts came out negative on this, saying that the 3D market really was weak, and these stocks took good size hits. So 18% down in Triple D, Stratasys down also about 11%, SSYS. This to us looks like a key area. Note the 34-week moving average right in here, where it keeps getting down into. See the breakout here just exploded through it. I think if it gets under there, it's got some downside distance in here. So this group looking really weak and not liking it at all. The first of the stocks that reported earnings is always Alcoa in the major stocks. This is a breakdown. I mean, really a bad pattern when we look at this as we check some of the material stocks. Take a look here at Alcoa, back to looking at the colored phasing, and what we're looking at in here is that, see these two blue lines right in here? We were looking for this cycle to bring us this bottom, and then another rally. You could see that right there. Well, the rally came and failed and already broke below here. That makes it a red zone, and this stock in a lot of trouble. We're looking for a decline into late November, beginning of December in Alcoa in what is a pretty bad breakdown pattern. Another weak stock in the group, Alcoa down 15% on the week, US Steel down 7%. Now, this is another stock that's in a rally phase. See this green zone in here, but it's already coming down and threatening this area of the low. If that happens, then this is all going to become a red phase for a long period of time. Analysts not liking this stock at all, and it better bounce from here. We actually have a long setup in here, thinking it's going to be a short-term bounce, and we got a little bit of a trade in here. But man, if it gets under this level here, we are so out, and out for a long period of time, and then only looking for short sales. So this one had a bad week, and I gotta say, there's risk in there of breakdowns. And if the stuff we're getting out of China is accurate, that seems like their imports and exports really taking big hits. That's going to matter a lot for these materials groups. And U.S. Steel, well, that could be a breakdown coming, and we're going to be out of our trade fast. In the retail category, on Friday was a day when analysts came out and really started to talk negatively about retail. We haven't been thrilled with retail. The ones we have hated have been the big box type retail. Sears, we think, was going sub $10 when it was in the 20s, 30s. And we've been talking about JCPenney. We think that one's going to go broke, so we're looking for $2 or lower. I don't think there's any way to save JCPenney, and these stocks taking some big hits this week on the downside. So take a look here at SHLD as we look at Sears. I mean, they are just closing stores like crazy, Kmart stores especially. Now, we're at a period in here, if you look at the cyclicality, where a bottom should be coming in. You see that rally we got right there that is almost non-existent? We got to wonder if that's all we're going to get, and we're going to double up on cycles on the downside like it did right over here. This is a terrible pattern. It couldn't even build a base as it gets to a lower low. Yeah, you might get a few pops in here of some sort, something that pops it over 12 because some ridiculous news comes out, or they sell something else and raise some money. But this is a horrible pattern. We have hated this all along, and it remains so. This stock down 9% on the week. JCPenney down also 9% on the week. Let's just take a look at this one as a stock that is headed towards oblivion. So what we were looking for in here was a decline through this period. You see we got that right there? And then we're looking for a attempted rally in here, which has not come. That might come here in this period where you get a pop somewhere over $9.5 right up in here. We think it's a screaming sale, and that they find out that through the Christmas season this thing doesn't survive, and out here in January and February there's a total collapse. I mean, we're looking into the crystal ball here, and we think that this one is in a lot of trouble. This one was on my riskiest for the year, as it started the year around 7 and a fraction, and you could see they have tried to save it. So another call that wasn't good. As far as the 24 that I made, there was just mostly fantastic calls in there. So we'll see at the end of the year. I'll take an accounting of all of that. And if you want to see how I did at mid-year, I mean, there was just some huge stocks in there. I think my average stock on the long side was up over 40%. It was just incredible. So JCPenney, as I took a little side note there, I think on the way down to, let's call it a $2 stock next year. The next stock we'll look at is Deckers, DECK. Analysts have downgraded this one. This is mostly about slow UGG growth. They say the UGG market is slow, and if that's the case, that's UGG boots. They're in some trouble. Now, I want you to see in here what looks like a bad pattern. So you see you get this rally and this bullish pattern. We call this a bullishly configured stair-step upward move. It comes down. It's supposed to rally again. It hits the resistance level, fails, and then after that, it breaks down underneath this level right here. That's horrible. You can see our cycle projection in here. There are similar periods where that has happened. Actually, this one right in here, it only had this little couple of week rally, and then when it broke under here, it had that long sell-off. So that's what this looks like to us, and we think this one's got a lot of trouble. Deckers, we think it could easily get back down under $40, trading now at 56. Macy's down $5. 5%. Dillard's down 6% as all these analysts gets downgraded, and Bed Bath & Beyond also down about 6%. We got to be worried about these big box type stores. The only one of the big box stores that I think is making a turnaround is Best Buy, as they continue to show that their online growth is starting to make them competitive. They're going to have to prove that this quarter in order to maintain any semblance of recovery. So we'll wait and see how that turns out. But most of these retail stocks under pressure and looking like that could continue out there. A few other stocks I want to mention in here. One is Yelp. Now, I'm short Yelp, and I've been talking about Yelp as a stock that was likely to move to the downside. I thought it was fantasy land, that the stock was a buyout candidate based on their model and their poor ability to earn any money, and then getting a lift from all of this stuff that was going on in Twitter, which you see all those buyers backed away. So I got short Yelp, as I've talked about it a number of times in here, and now you could see this evening star pattern on the weekly that's formed. I even put in some targets in here for myself, for our subscribers, where I think it's going. So there's the minor support right there on the 13-week moving average, and you could see how it's kind of moved up that 13-week moving average here. So that makes sense. It's going to maybe stall right there. My first target is down here around 32. The second target is down here around 29. You can see that 34-week moving average coming in right around there. I think this is a stock that continues to have risk, and I have not covered a short in here. So I think it's... I just realized that I just took a little profit on a tiny little option trade. I didn't even realize that. So I don't want to lie. I just took a little bit of profit on this move on the downside, and if it bounces, I'm going to load up again. But I'm still quite short. So that is Yelp, and I think a stock that's in a lot of trouble. Talk about stocks that are in trouble. Take a look here at Pandora. Look at this downside movement here. Amazon is aiming straight at it with their Amazon Prime streaming music service. And look at that big down week right over there as it loses about 8% on the downside. We could see another few weeks on the downside here. Our target would be under $12, maybe $11.50. At a first stopping point, but then after that we think it's much lower. We would not be surprised to see it below the low of last year, in coming months, under the $7, as they're just in an area where they are not able to compete with the likes of Amazon, Apple, that are just aiming at it in a big way, and I think that you're going to see this stock, Pandora, getting hit pretty bad. One more thing we got to look at here is I always seem to make comments about the coming election. Well, it certainly, based on the polls, it does look like we're going to have President Hillary Rodham Clinton. Hard for me to say. And those stock groups that have been the type of stocks that she could help, looking like they're trying to bounce, the stock groups that looking like she can hurt because she's aiming at them, looking horrible. Take a look here at IBB, because she certainly wants to kill the pricing power of these stocks, because she thinks that drug companies shouldn't be naming their own prices on drugs. So here is a look at IBB, and again we can look at the cyclical patterns in here. Every time you get a declining phase that you see right over here, right over here, right over here. So those are the declining phases, right over here. Here's this one right over here with another, we'll call it 4 to 6 weeks to go on the downside, right into and past election time. These stocks could be in a lot of trouble, as she is so far ahead in the polls and likely to be elected. So you can see what has happened right there. How about a stock that could get hurt based on this also? President Obama has pretty much ended all the coal companies' abilities to earn any money. So we've seen, Arch Coal go to zero, BTU go to zero. So those have all been going to zero. This is the last of the coal stocks that didn't go to zero. In fact, this is more of a multi-dimensional company. But look here at that engulfing pattern right there, as the stock is down about 6% on the week, And when you get those kind of sell signals, this was an evening star right there, and it fell for 5 straight weeks. You can see what we're looking for, a decline into the election right over here. CNX, a coal company that looking like it can be in a lot of trouble. So that's it. That is the worst of the week, and maybe some with a lot more to the downside coming. Be right back with my short-term view. All right, our short-term view for the coming week of 5 major markets. Before I get there, I just want to remind you about our new workshop coming out. Nothing like you've ever seen in a workshop before. It's a huge reveal by me. I share my lessons of 42 years as a trader with you, go over the 5 essential building blocks to successful trading. Just go to the front of the website, go to the bottom of that front page, click on the puzzle piece that says 5 essential building blocks, and fill in your email address. We will let you know when we have the information to send to you about signing up for it. We don't share those email addresses at all, so it's safe. So if you're interested in raising your probability of success, let us know that you're interested in that workshop. It's just an interest list. All right, so let's get into these 5 markets that we're going to look at short-term view. I always take an accountability as how I did in the previous week. Last week was my worst week of the year, the week before, where I was only at 20%. This week, back to norms, let's say, as we had about a 75% week. Really did well. We missed the euro market as the dollar was stronger than we expected. And that weakness that we saw also in the British pound was really leaning on the euro, and the euro did not do anything like we expected at all. It was just a big down week, and we thought it would be an up week. So the rest of the 4 markets we got almost perfectly right. Missing some by just tiny little few points or few ticks here or there, and I'll show you all of that as we look at what we think will happen in the coming week. So we'll start out by looking at the light crude market. Now, this market, what we thought it would do, would test 48.90, which was a 23.6% fib retracement. That was a bullish belief because we thought it would only give back a little, and then we thought it would go up again. Well, here is your test right in here, and there it goes up again. So that was pretty much perfectly in line with what we expected the market to do. So it comes down, tests support, gets a little bit of a bounce, and now we believe it's stuck. Why do we think it's stuck? Well, we think that the intermediate pressures, which were strong up, remain, but there's a corrective pressure coming in here right there. The shorter term patterns are, well, let's put it this way, in question. This 7 did not look like enough of a decline. This 10 does. So we're 10 days off of this low. These were way too short. We had a series of 6-day patterns in here. So I'm not surprised to get something like that. What we're going to look for this week are attempted rallies that don't really get anywhere. We're in this corrective period here. So we're probably going to get stuck between 49 and 51.60. I'd sell it over here. I'd buy it over here. Looking to get stuck in there, and then after that we're probably a week or week and a half away from the next launching period over there in the oil market. That's a little bit of an intermediate look, but the short-term look looks stuck in this range. 49 to 51.60 is where it looks to us right now. Gold market /GC, we almost nailed this one. What we expected to happen was that it would have rallies that fail. We thought it would test the support area at 1238. And still said it was in a pretty risky mode. You can see what happened. It got into a triangular shape right over here. It actually got down right over there to about 1246. So it missed by about $6-7 from where we thought it was going to come down to. Not too bad. We thought it was going to be a week that remained under pressure, and that's what we got. What we see this week is similar in that we still think it's going to be testing this 1238 level, but there is about, we'll call it 3-4 days in here of some pretty good risk. There's a potential of some throwaway to the support at 1211. It shows up on the weekly chart, not here on the daily chart. We're thinking 1238, potentially 1211, and this period of weakness is going to come to an end and then get into a period of a bounce. That's really what we expect, is sometime by late week turning to the upside. Not as dramatically as we put it in there, but some potentially severe weakness, maybe even capitulation in the next few days, and then after that rebounding and turning up, assuming we're right about that weakness coming in, and then after that we're really still looking for some extended choppy periods on the intermediate term, but we're just looking for this right now over this next week or so. So let's see if they capitulate, if they get under 1238 to that area of around 1211. The euro market is the one we completely missed, as what we had expected to happen did not happen at all, and this pattern really turned out quite different. It turned into a much weaker pattern than we expected. So in other words, this declining period and this rally period, that's where we kind of expected a rally to come and then to sell off after that. However, this rally period brings nothing. This is what we call a severe left-hand translation. In other words, the rally ends abruptly on the left side of this and then goes into further decline. This is a horrible pattern, really. And in alignment with what we see on the intermediate patterns, it looks like out into somewhere around the beginning of November before this really can get into any kind of a serious rally period. We're going to look for a bounce that fails, is essentially what we're looking for. So it could come down a little bit more for a day or two, and then a bounce up to maybe the 111 area, so maybe a penny or a little less than a penny up, and then after that we expect down again. So we're going to look for bounces that fail, potentially getting up to 111. Next one we're going to look at is the bond market /ZN, and we're on 2-year charts, so we get proper cycle alignment, and then we come in here. So what we expected in the bond market was that it would have another down week. We said momentum was still on the downside. We thought that the 10-year could get a rally up to around 130.15 and fail. It got up to around 130.07 and failed, so it wasn't able to get quite up to the level that we expected it to. Now where we are is just ending this pattern right in here. So you might get another down day in here or so, but we don't expect much more on the downside. And then we expect to get a rally going. We see that the rally getting up to this minor resistance area. You can see our cycle projection that's in there already for our subscribers on our charts, that we expect the rally to come, get up into this minor resistance zone, and then turn south again. So 130.12 to 130.20 is the area that we expect to get up to there and then fail. That we would consider that for agile traders a short-term selling spot right there for the bond market. Part of what we believe about this is that we think that the stock market is going to get into some more selling early part of the week. So we think that's why we're going to start to get a flight to safety lift, which you saw happening here on Thursday on that China news. I think that if we get some more selling in the stock market, which I'm going to say is a higher probability, then we get that bounce in there and it fails. The number on the 30-year is 166 on the ZBs that we think it will move up to also, and then fail. So let's talk about the stock market. The stock market, we expected that it was going to try to rally early in the week and then turn down and fail. We thought it would roll over from the area of around, on the S&Ps, around 121.60 to 121.66. It blipped through on the upside for a few minutes to 121.69 and then turned straight down. So we missed that by about 3 points, not very significant. And then it did turn down as we expected. We thought risk would be increasing, and that's what we got, is a nice sell-off to the downside that you saw was a very, very choppy week. Sell-offs could not hold as the buying keeps coming in. But we think that there's going to be some sell-offs coming soon that are going to hold on the downside, potentially some of them getting pretty nasty. So we'll take a look here at the S&P 500 for the coming week. So the pattern that we are looking at in here is the bigger pattern and the shorter pattern. So here's the bigger pattern right in here. You can see that how that worked. You see that pattern right in here also. And there's also one right in here that goes back over here. So this bigger pattern is made up of 3 patterns. So we have the a larger cycle that runs here around 27 days. We have the smaller one that's around 9 days. So it breaks it up into 3 parts. 1, 2, and 3 and down. So there we are right here. This bigger one pushing down, this intermediate one pushing down, this little one over here pushing down also. We don't think that there's much a possibility for rallies to hold when we're like this. We think we're going to get sold pretty hard. We're looking to get under this week's low, which was at around 2114 on the S&P 500. There's a potential to get down here to 2093, the bottom of that short-term support zone that you see gave it support right now. And so that's what we're looking for in the early part of the week. We're going to say 3 to 5 days potentially on the downside in here, and that could get down and test those levels. Is it possible? We've been talking about the high likelihood of a 5% correction or more. That takes you down to 2083. So it's really resistant to the declines right now, and I actually think that's going to end, and we're going to see some, at least a day or two of some harder selling coming in here in this week. So of course the markets have proved me wrong before, but I see a high probability based on the way these patterns are laying out that the market is going to have some serious weakness in here. The VIX last week, we said that we thought it was going to move, getting ready to move up again. That pattern in the VIX still remains that way, where we think we're going to get higher prices. Still, I actually want you to see the way we have this laid out right now in regard to the coming election time. Let me get this up here so that you can see it. Here is the way this VIX pattern lays out. So what I said was I thought that this week the stock market would fall, and that we would get this uplift we got right there in the VIX. I think in this coming week it's going to continue to move up, then have some kind of a pullback right in here, and then into the election right over here I think is some problems where we're going to get more on the upside in there. If I put that up for you on the weekly pattern, you can see all of this stuff right over here where we're in this rising zone that goes out sometime into November. So this really all points to the potential for the stock market to, be choppy, but choppy on the downside. And again, we think there's a potential for something severe happening relatively soon. And is there a reason to celebrate this election that's coming up? I don't really see it. That is it for the week. Hope that you found some information in here that was valuable to you, and that you can raise your odds of success through us sharing what we learn and sharing all of our analysis that we do all week long. RV and I look at these charts for hours and hours and hours every single week, update them, keep bringing new information as it happens for you so that you can be the best trader that you can be. Please consider signing that interest list for our coming workshop. I know that when you take it, you're going to think it's incredibly valuable and insightful. I hope this is a great winning week for you. Be safe out there because it's crazy. And we're always wishing you great trading.